Here we are for day 6 of Shop Talk. Awesome to be back here with you. Had some pretty awesome emails come in overnight, and I just wanted to do a quick shout out at the start of this Shop Talk to Tim. Thank you so much for your email. Thank you for sharing your situation and the thinking behind some of the things that you've done in the past 12 months. And thank you for letting me know that you're getting so much from this. Me, as the coach and the mentor, nothing thrills me more than knowing that what I'm sharing is having the desired effect. So thanks for reaching out and letting us know. All right. Yesterday, it was more about labor rate and parts margin and how those two combine together to help you achieve the GP that you need. But today, I'm going to skip down to the bottom of your profit and loss report to the net profit line. Now, you might wonder why we would focus so much on that, given it's everything above it that determines what your net profit is. But there's a whole thing around the net profit line on your profit and loss report that just makes no sense to the average repair shop owner and doesn't get discussed enough by the accountant. Now, we could do a whole video on what your accountant should be doing with you, and maybe we will over the next 24 days of this 30-day Shop Talk series. But I guess the thing about the net profit line is that it's most confusing to you when there's a reasonable number there for the amount of profit that it's showing you your business has made, but you don't understand why you don't have that much money in the bank. So let's assume that we're talking about a profit and loss report that is showing your complete 2025 yearly results. So for the whole calendar year, not the year to date. And let's say it says your net profit is $200,000. Now, your accountant might say to you, great result, better than last year. And you're like, oh, okay, cool. But then you think, but where is that $200,000? We've got 40 cents in our operating account and tomorrow's payday for our employees, for our team members. I don't understand where that money's gone. And the reason that it's likely not sitting in your bank account as a nice round $200,000 number is because there are things that get taken out of that net profit amount that don't appear on your profit and loss. They actually live over on your balance sheet. And most accountants won't go anywhere near your balance sheet when they're having a financial discussion with you. And if you're only speaking to them in this capacity, maybe on a Zoom call or a phone call or face to face once a quarter or once a year, if they're like most, I will call them beige accountants, they're actually not even going to go near it. One of the most surprising things I've found as a coach and mentor in this space, in the auto aftermarket, is how little attention accountants actually pay to having up-to-date balance sheets. So what should be up-to-date and accurate on there aren't just the assets that the business holds and the director loan information that it's holding for you and your eventual total owner's equity in your business. Your liabilities live on there. So anything that is a debt that you owe, that you have to repay, lives on your balance sheet. The payments for it do not appear on your profit and loss. So when we think about that $200,000 that is hypothetically sitting on your profit and loss, on your profit and loss as the net profit amount, your debt repayments have to come out of that $200,000. So that's the first reason why that money isn't there. The second reason why that money isn't there is if you're not on the pay run for your own salary and it's not taken into account in the operating expense section of your profit and loss where your team members' salaries might be, then that owner's salary's got to come out of there as well. Anything that you've taken as a drawing, a director's drawing that hasn't yet been treated by the accountant, it's probably sitting on either your P&L, perhaps inappropriately as director's drawings, or there is a line for it on the balance sheet. But that's got to come out of that $200,000 as well. So let's think about the liabilities that you might have if you're the average auto repair shop owner. That could be a credit card. That could be a business loan. That could be your equipment finance loans. So if you've purchased some hoists and you're paying those back, a wheel alignment machine, a scan tool, maybe you're happy-go-lucky when the Snap-on man drives in the driveway once a month, and you're paying them back, as is the case with most of the stuff with Snap-on. All of that sits on your balance sheet. And because most beige accountants aren't really taking much notice, you can have years old entries of liabilities on there that have not been updated. And this is why it's such a confusing document for most business owners, let alone repair shop owners, because the accountants don't keep them up to date. So it should be up to date at the end of every month when all of your end of month is closed off by yourself, your bookkeeper / your accountant. In Australia and New Zealand, we pay something called GST. In the United States, you've got sales tax in many states. Same thing. There's a monthly reconciliation that needs to be done, and that's when everything should be done, including updating the balance sheet, so that any payments you've made on your liabilities, your debts during the month, the balances of those loans or those credit facilities are updated as well. You should be able to look at your financial reports inside your accounting software. So many of you will be using an online management software program that is the auto specific part, so where you do your invoicing, and then you'll have it connected, hopefully, to an accounting program like Xero or MYOB, hopefully not QuickBooks. Some of you, especially in Australia, would be using something like Automation Premium, which is an all-in-one. So you've got your ability to invoice, your customer database, all of your mechanic-specific stuff, and its accounting program is in there as well. If you're in heavy vehicle, especially in the US, you might be using Fullbay or something like that. So you should be at any time, if your system for bookkeeping and accounting is working as it should, at any time you go in and everything's accurate. At least once a week, the bookkeeping should be being done, if not daily. Obviously, the bigger your business, the more you need to stay on top of that. So we've worked with, big repairers who employ 60 people who are turning over $25 million a year. We can't be doing the bookkeeping once a month. We can't be doing accounts payable and accounts receivable once a month. So you've got, as the professional business owner, and in many cases with the mindset of the CEO, once your business gets to a certain size, we need to be able to look and assess our financial position anytime we need to. And if we've got a balance sheet that's in some cases years out of date, well, we really don't have a clue of what our true debt position is. We had a couple of clients that we worked with over a number of years whose balance sheet was like a graveyard of current and very old, non-existent debt. And it took a year and a change of accountants in order to clean that mess up so that they could see exactly what they owed and to whom. And then within 12 months, using our cash flow management system, they had smashed $300,000 worth of remaining debt that they had, much of that to the ATO, which is the Australian Tax Office for those outside of Australia. So it's there's a tendency to not want to look, to kind of bury your head in the sand when it comes to understanding our financial reports. And it's this whole thing again of, I'm so busy, I don't have time. I've just got to get the jobs out. I don't have time to meet with the accountant. And I've got to be really clear with you here. If your accountant isn't proactive with you, especially if you've cancelled a couple of your last meetings with them, then they're not the accountant that you need. Do you need to show up? Do you need to have some self-responsibility? Absolutely, you do. But if your accountant's okay with not meeting with you because their own business systems aren't great and they're busy too, that's a great indication that they're not the right one for you. So we have something called the success team that is one of our pillars inside our Workshop Whisperer programs. And your accountant is a very, very important part of that success team, along with your bookkeeper, your financial advisor, and your business coach. All of those people need to be working in conjunction with you as a team to help you achieve the best result. So you should definitely, even if you think you don't know how to use the accounting part of your software, you should definitely just ask ChatGPT or Google to tell you how to find it today. And if your bookkeeper's in today, ask them just to print it off and show you. And have a look at the liability section and what debts it says you have. There's a good chance there's the car loan that you might have paid off 2 years ago still on there. Or you've got equipment finance that, you paid off a while ago. If there's any of those things that you're sure you shouldn't still be paying for, but they're still sitting on there, then they're things you need to query. And you need to ask for an updated and accurate balance sheet and say that you would like it by the time you return to work in January. So, yeah, we're having this discussion at one of the busiest times of the year, but your accountant would still be at work, probably right up until Christmas Eve or the day before, and they'll probably be back on the first working day, first full week of January. And if it's not up to date, we'll ask them the question, why isn't it up to date? Why aren't we paying attention to this? I'm sure we've paid these things off. Or ask the question, how much money do we actually owe the tax office at the moment? What are the repayments? With our cash flow management system that we help our clients implement in their first 90 days, so that there's more cash available. There's a multi-bank account system set up. You will preface paying debt. So you'll prioritize smashing debt if you have it. Now, that can feel uncomfortable because you're going to ask your business to not gobble up all the available money like it has been for however long. And you are going to prioritize paying down bad debt. And any debt that does not have an appreciating asset attached to it is considered bad debt. Now, equipment finance. Do you need equipment to be able to do the work in your business? Yes, you do. However, that equipment still depreciates over time. Can you get a tax write-off for that? Yes, you can. But it's the value of that piece of equipment isn't appreciating. So we still call it bad debt and we still prioritize getting rid of the debt as soon as we can. Now, we don't disable the business's ability to function by putting everything to the debt, but there is something called a debt snowball. And it's a particular technique to help you knock off one debt at a time and get it done as quickly as possible. Does it take a little bit of work and practice to implement it? Yes, it does. Is it worth it? Ask Regan. Regan is one of our clients in WA who came to us 4 years ago with what is a substantial amount of debt. And only 2 months ago, he announced to our entire client community that he had paid off that $450,000 worth of debt using our cash flow management system. It's an extraordinary achievement. Now, you might not be carrying anything like that much debt, but you know it's there and it feels heavy. Well, there are ways to get rid of it fast and it doesn't involve further debt. But you don't get your head into this stuff if you don't understand what's going on in your balance sheet. So let's make that our takeaway from our day 6 session. If you suspect that the liability section of your balance sheet is not accurate, ask your accountant why. Ask for it to be cleaned up. Get an accurate understanding of how much you're actually paying out in debt liabilities every month so that you better understand why that amount for net profit on your P&L isn't sitting in your bank account. Okay? It's the number one reason why. Also understand that if you're going to put your business on a bit of a diet and maybe you'll come in to our client community and we'll help you implement our successful cash flow management system, or maybe you'll wing it and try it for yourself. But what you need to be clear about is that putting your business on a bit of a diet does mean that you need to do things differently. You need to look at things differently. You need to expect that it will feel uncomfortable because you've been doing things a certain way. Maybe you learnt it, from the person who you did your apprenticeship with, and you watch the way they do business and you're modeling what you think they did. That's led to a certain result, and it's possibly one you're not happy about if you're here watching this with me. You're trying to learn something new. So the new to understand is that any new information you've just got to be open to, okay? Because that fear mind that I spoke to you about on day 1, it's going to be telling you she doesn't know what she's talking about. She doesn't understand the situation in my business. She doesn't know what I'm trying to do. Well, I don't need to personally understand your situation to share best practice with you. What has worked personally for myself, my business, and the thousands of other repair shop owners that we have helped in exactly the same way. Okay? Your business is not different, but your fear mind wants to tell you that it is, because then you don't have to move outside of your comfort zone. Okay? So stay open. Is it uncomfortable? Yes. If you feel like your financial reports are written in a different language, is it uncomfortable, and does it take practice to become familiar with it? Yes. But I guarantee you, if you just keep at it, make a financial appointment with yourself every week to read your financial reports, find something that you don't understand and seek to understand it, ask the right questions, or even what you think are the silly questions of your accountant. Come into our free Facebook community, Your Profitable Auto Repair Shop. Ask your question there. Come into our client community. Definitely ask your question there. But be more comfortable being uncomfortable with your finances. That's my best piece of advice for you, because the people that can pass through the discomfort and do it scared, like we talked about yesterday, they are the ones who have the great results, like Regan, who paid off $450,000 worth of debt. And if you want to know more about what Regan had to say about that, you can jump over to our Instagram page, The Real Workshop Whisperer, because there is a reel there that he did with us. And of course, we've posted it with his permission. So you can't be what you can't see. If you need the actual evidence, jump over there, watch that, and listen to how he talks about the burden that has been lifted. But to finish this one off, if you have taken something great away from this one, then please subscribe to the channel, like this video so that it goes further and others can be helped in the same way that you have. And I look forward to seeing you tomorrow on day 7.